Hello friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about 5 companies that you can buy for the next 15 to 20 years and make returns well over what is the deposit rates and in a safe manner. These 5 companies are well renowned, but most people do not buy them together thinking that they are expensive. So I'll discuss them in detail. Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about these 5 companies, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. You can also go to the website and take a $100 membership for the year, so that's a 20% discount on the yearly membership. You get 2 months extra, so you pay for 10 months and you get the 12-month membership. So you can take the yearly membership. Kindly try that out. For detailed market or company talk, you can directly contact me if you have a number of shares with you, and we can work things out. Before I talk about these 5 companies, here is about the criteria. These are established brands and strong managements, diversified yet market leaders in their own rights, low debt, virtually no debt, no pledging, very less pledging, probably 1% at worst, strong institutional holding, promoter holding, solid return ratios, and numbers. How about to put allocation? So these are 5 companies. Put 20% in each of them. Buy over the next 1 year and hold for the next 20 years for your child's education. It should grow at between 18 to 22%. I don't make any claims of that, so that's a disclaimer. But these companies can grow between 18 to 20%. Look for deep cuts to accumulate, look for strong declines to accumulate these stocks. My first pick is Asian Paints, and the first and second pick are the best 2 companies that I like in this space. And a disclaimer, I have bought them for my child's education as well. I believe Asian Paints, and the second one is PIDILITE, so I'll talk about them. These 2 companies have grown at, and I have looked at it, they have grown at more than 25% CAGR over the last 15 years, and I have no doubt that they can grow at around 25%, 20 to 25% CAGR over the next 15 to 20 years. As more houses are built, they have more than 50% market share. So every second house is being painted by Asian Paints, and this is going to get even bigger, even with the companies like Grasim, companies like Berger Paints taking market share and gaining in traction. I still believe Asian Paints will remain as the best in terms of leadership, in terms of quality, in terms of management, etc. Top-notch company, and something that has great moat and longevity. So remember that when we are talking of 20 years, people make the mistake of buying the smallest one or the very small companies, that they think that over 20 years a 500 crore market cap company becoming 5,000 crores or 50,000 crores is easy, and that can possibly happen compared to a 1 lakh crore company becoming a 100 lakh crore. But contrary to that belief, I believe that a 500 crore market cap company can become zero very easily if things doesn't go right, due to any reason, whether management, whether environmental reason, some threat, etc. Whereas a 1 lakh crore market cap company has the pedigree and it will not become zero. They will give you some returns at least. So we have to be on the safer side. We have to have companies which can grow at least over that 15-20 years. So that's why Asian Paints is the top pick here, and pick number 1 here. Second is probably, I call it its cousin, Pidilite, because whenever there are houses being painted, and whenever you would see in your house that whenever there's paint happening, then you use Pidilite for all the repair works, etc. And even in paints and even in construction activities, Pidilites and their products are being used all across the world. Not even just Fevicol. There are many products of Pidilite that are now household names here in India. Leader in adhesives and construction material, Fevicol is a huge brand for the company. Market cap of the company is under 1 lakh crore, nearly 1 lakh crore, which is quite surprising for me. For the kind of brand it is, I won't be surprised if this becomes like 10 lakh or 20 lakh crore going forward. So clear 20 bagger can be possible with something like a Pidilite over the next 20 years. I would not be surprised. It has grown at, just listen to this, it has grown at 32.5% over the last 16 years. Over the last 16 years, the stock has risen by 32.5% CAGR. We look for companies that can double in 3 years, that's 27%. We look for companies that can double in 2 years, that's 40%. This company is doubling every 2.5 years. The stock is doubling every 2.5 years, and people don't buy it because they feel it is expensive. uh, I believe that yes, it cannot grow at 35% continuously for the next 20 years, but again, 20% CAGR is very much possible with the kind of, you can say, growth. And if you believe in the India growth story, you have to believe in these two companies. That's Pidilite and Asian Paints, a monopoly in this segment of adhesives. Big play on construction and India growth, as I have explained, similar to what Asian Paints is. Top management, good dividend, etc. Everything uh, picture perfect in terms of management quality. So you will get decent returns. I cannot promise 32, 30, 25, but returns could be very good. The third in this list is a slightly expensive counter, 16,000, 17,000 rupees per share, is Nestle. A CAGR growth of 18% over the last 16 years. A leader in FMCG product as well, have been a performer for decades. Yes, the sales growth and profit growth has not been 18-20% CAGR, but the stock has grown in that manner because it has had a leadership in this space. It has been quite a play for, you can say, child's food products, milk products for child, and you can see that. So Nan Pro as its brand, and I've used it myself, and it is just top class. So some of its brands are like way above anything else. There's no competition whatsoever, and that is the kind of moat that this company enjoys. Yes, it may not give you that 25% CAGR, but yes, between 15 to 18% safe returns with heavy dividend, which keeps on increasing every 2 3 years, will be yours, and a top notch company that you'll be having in your portfolio. Even if you are putting in 50,000 rupees, you can buy 3 shares of Nestle. That's better than buying, even you can say, 1,000 shares of some stock that is 50 rupees. Considering the kind of growth this stock will have over the next, you can say, 2 decades, I won't be surprised if this grows at 18% as well, or at least 16 to 18% over the next 20 years. And FMCG sector, there are 4 5 huge companies. This is the best of the lot. There, I have checked HUL, I have checked other companies. The returns are slightly less. 18% over 16 years has been the return here, and I think it's going to be consistent for the next 20 years. So this is like a consistent player in your portfolio, Nestle. So let's see, after Nestle, which is the next stock in this portfolio, there are two stocks that are left, two companies that are left after Asian Paints, Pidilite, and Nestle. The fourth in my list is BATA. Now, this is an interesting company, and probably you can say a slightly lower market cap company, 17 18,000 crores. leader in the footwear space. Yes, there is Relaxo. There are other companies like Mirza International, etc., which can grow better in the next couple of years. But if we are looking at, as I have explained, if we are looking at 2 decades, you have to be with market leaders in each space. Bata India has not performed whatsoever ever since the shutdown has taken place, the pandemic came out. I believe it is a biggest play for opening up trade. It's a big play on opening up of economy when everything normalizes, whether it takes year and a half. I think after that the stock will be beyond 2000. That's my opinion. The stock has had very good return ratios in their heydays. They also produce bags, belts, lady shoes, other products in shoes, etc. They have increased their gamut of products, have business across India as well as some business abroad as well. Uh, Currently under stress on back of low demand, and you need to understand that when schools open up, this will have a huge pickup as a company, Bata India. So I believe these are very attractive levels to buy when you're considering 2 decades of time frame. Any levels below 1400 would be even better to get into. I think 1200, 1250 would be the lowest it can go to. Once things open up, it will be beyond 2000, and then the traction will take it further upwards. I won't be surprised with the kind of correction it has had, at least time correction, if not price correction, that the stock should give you over 20% CAGR over the next 20 years. If somebody wants to buy for their retirement, for other purposes over that period, this is the stock to be in. A safe stock, a defensive kind of a stock, doesn't move that much, non-volatile, doesn't fall like vertically unless there is a heavy market fall of 35-40%. This is something that can be accumulated over a period of time. And the fifth stock in my list, and I cannot stay away from technology, although how much I like consumer. And when we talk of technology, when we talk of changing the face of Indian IT, then you don't have to look beyond Infosys, a leader in the IT space, a top management, perhaps the best of the best management in the Indian market, Indian stock market. And remember, technology will be the key for the next decade at least. And I was thinking of putting in a Tata Elxsi, I was thinking of putting in a Larsen and Toubro Infotech, thinking of putting in a Happiest Mind, all those mid-cap IT companies. But then you need to look at the time frame of the investment that I'm talking about. When we are talking of 20 years, then you look at something which could consistently keep growing and you don't have to worry about. If somebody wants their retirement funds, they want to get it into an NPS, they want to get it into a fixed deposit. So you need to understand where I'm coming from when I'm talking of these stocks. I'm coming from the fact that of that person who don't invest into the market and who look to make money, who want to make money in the market yet don't want to take much of a risk. These are the five stocks to really get into. I think technology will remain as the front runner when you look at the longer term time frame, and Infosys will be the bellwether there. Yes, it is at a new high. Whenever there is some sort of a decline, keep on accumulating this stock. This has given around 15 to 17% over last 16 years. I think this will give even better return. I think the returns have been subdued over the last decade because of the kind of move that other smaller companies, smaller IT companies, smaller pharma companies, and other sectors have had. I think Infosys will again have its days over the next 20 years, and will perform really well. One of the trusted companies here in India, and this decade should belong to the IT space. That's what I believe. Huge cash on books, and may see more acquisitions, or you would see higher amount of dividend, even higher dividend being paid by the company. So this is a video on 5 of the companies that you can buy for your retirement or child's education. Please like and subscribe my channel and hit the bell icon so that you can get my video straight away when I post it. Thanks a lot for watching.